Hello, everybody. Jim Malone here, coming to you live from Dallas Trading Floor. Well, it is a Wednesday, and Tesla is kind of selling off a little bit. So we're going to get into that later, but I'm just wanting to kind of, run through the slides and see kind of where we're at in terms of of this situation and how we're going to trade the market. The market is still in a confirmed uptrend, so that indeed is a good thing. But it's pulled back a little bit. Nasdaq is about 12,344.80 when this slide was taken, and we are down on the S&P 500 and down on the Dow Jones. The volume is pretty weak, though, so I don't know if this is the start of a trend or what. But this might be we might be into a little bit of tough sledding here. Who knows? Just wanted to show you the S&P index here, and it is pulled back a little bit today. The index is at 3674.71. It's down about almost a point, but not quite. But there definitely is a pullback. But we still haven't broken trend. We're still moving. We're still moving higher, which is a good thing. And, so that indeed is good. So, we don't want to be all out of the market here, but, we're kind of in this weird, this weird thing where, we don't, kind of got one toe in the market and not everything is working as well as it was. So a little bit of caution. You want to be a little bit cautious. You want to set those stop losses up and, make sure that you're doing that properly as well. The Nasdaq is pulled back more than the S&P 500. It's pulled back about almost 2% when this slide was taken. It's at 12,334.93. Now the significance of that, of course, is that means that there might be, though it doesn't seem like that, there might be a rotation out of some of the techs. There might be some profit taking in the techs into into some of the other beaten down stocks that are in the S&P and possibly in the Dow. So just be forewarned about this potential for a, not really sell-off, but maybe a little bit of rotation out of some of the high-flying techs. Just wanted to show you an interesting stock that I added today, and it's it's on a lot of good lists here. It's definitely being accumulated by the funds. And by the way, I'm just going to go through. Before I get into the slide, before I get into the questions, I'm going to go through a number of stocks that the funds right now are buying, and so that might be a good thing. It's Floor & Decor, and currently it's $89.86. It's up about $2 when this slide was taken. Definitely moving higher and very nicely. Just kind of wanted to show you that on the list. So the symbol for this one is FND. I don't, it really just moved above buy point. It's still buyable at this level, but, something that you might want to be taking a look at and maybe putting on your watch list too, because it looks like it might do well. Now, my current holdings, I've gotten whacked today. Everything I have is down in price, so not what I want to see. I'm down in car parts. I'm down in Palantir. I got in CrowdStrike. I got sold out of advanced micro devices. It's still on this list, but I actually got sold out of it in my small portfolio. So that was kind of disappointing. But this kind of gives you an overview of that. Here's the stocks that the stocks are buying right now. The funds are buying right now. Cohen, which is a investment bank. TBIO. It's a bio company. They're all pretty much down except for Green Brick Partners and Option Care Health. So there's a lot of defensive plays right now that are happening, moving into some of those healthcare stocks as well. Now, one that I want to kind of point out, and you've probably heard of this one, but I do think it has some very good legs. It's Fiverr, FVRR. And what I'm going to do in just a second is going to go through some of those as well. So. When we get into it. So without further ado, let's go over to some of the stocks that the funds are kind of buying, and I just kind of wanted to kind of give you an overview of that and just ones that you might want to potentially put on your watch list. This one here is Cohen, and it's off a little bit today, but it's moving very nicely up the 10-day line here. So this is one you might want to consider. It's 24.77, down about 7 cents currently, but it is being acquired by a lot of the funds. And on the weekly chart, we're going to pull over the weekly chart. You can definitely see this. It has positive cash flow. I definitely like that, of course. And we have increasing sales, which is very nice. We also have large numbers of funds starting to move into it. Funds own about 51% of this stock. Now, here's the reason I'm so interested in stocks that funds are buying. In order to move a stock, you really need the big funds coming in, and this one definitely has it. Again, this has very nice relative strength of 90, and it has an upward trend on the weekly chart. That's what you want to see. Also, in terms of the checklist, it has a 100% checklist, and this is the very best checklist that you can get. So this one, Cohen, symbol COWN, might be of interest to you. Let's take a look at the next one. This is Translate Bio. I'm not as bullish on this one. It doesn't. Even though it has a higher relative strength, and the reason for this is that the bios are typically very tough to play. But this one also has, increasing sales, very nice, and it also has the funds are moving into it. They've moved into it very well, but this has to have negative cash flow, and it is not as many funds in it as I'd like to see it. Also, the checklist isn't quite as good at 77 compared to Cohen, which is at 100%. But we do have nice fund ownership, so that's one that you might want to consider as well. Symbol TBIO. Now, here's one you've probably heard of, and I'm pretty bullish on this one. It's Upwork. And this one definitely may go higher. There's a lot of interest in this one. This one has extremely good relative strength at 98, and we have nice sales growth here. We are 62% of this is funds, and we've just turned the corner, and we're making a positive cash flow. This is an important point typically for anybody looking to buy a stock that may go double and triple, and that is you want to see it. You want to see it move from sort of negative cash flow to positive cash flow, increasing funds, and it can be a good way to be in it. Of course, we have the highest likelihood of a stock doubling is going to be when it's from about 20% fund ownership up to about 65. And currently, this has a very nice checklist, 8 out of 9 on this checklist. And if you'll look at here, you have increasing fund ownership. So this one you might want to consider. It's Upwork. The symbol on it is UPKW. So that's one that I like as well. So I'm going to give you probably 2 or 3 more of these, but hopefully if you get onto the action trade alerts, I'm going to try to put out this to the people that are on the action trade alerts. And it's really easy to get on the action trade alerts. All you have to do basically is go to www.dallastradingfloor.com and then sign up for the action trade alerts. And I'm going to try to probably send this one out with charts possibly tonight on that. So if you're on that list, definitely share some of these with you. The next one, and I want to pull up here, and it's the one that I actually have in the small portfolio, and unfortunately it pulled back today, so I was I was a little bit miffed about that. But it's carparts.com, and it has a 99 relative strength to the market, which is very strong. It doesn't get any better than this, folks. 99 on that. It also has a very nice increasing sales, and of course, it has it does have a negative cash flow, just barely, but this one is a little bit fund centric. 99% of the ownership on this one is funds. So let's take a look at the smell test, and the smell test isn't quite as good as with Cohen, but this one is 7 out of 9, so that's pretty good, and we have very strong fund ownership. It's gone from 114 funds in June to 209, and 99% of this company is actually owned by funds. So that's one to consider. And last but not least, I just want to kind of show you this one because I think it's kind of a cool company, and I definitely think this is the future for a lot of things. It's called Fiverr. I'm sure that many people have heard of it. symbol on this one is FVRR, Fiverr. It's off a little bit today, but it's still above the 40-day line, so it's looking pretty good on the weekly chart. It's also got a 99 relative strength. This is very strong. It also has very nice increasing sales, and of course in a growth stock you want that. You want those increasing sales. It is still negative cash flow, so it's essentially, getting ready to make that turn from into profitability. But when that happens, it could happen big. And funds are about 39% in this, so it's right in the sweet spot in terms of where it may start to accelerate. Now, of course, I haven't gone through with buy points on any of these, but this is one you might want to consider as well. It's got a strong checklist, 8 out of 9. Of course, 9 out of 9 is the best you can get. And of course, this is the really good part about it. It is that this increasing fund ownership, and it has some very, very good funds in here, like Wells Fargo and Columbia Small Cap. So it is a small cap, but it could be something bigger. So thanks for taking a look at that, and we're going to get right to the questions now. We're going to get right to the questions in the show. So here's the show. Let's go first to Dinesh. Thanks for holding on, Dinesh. Dinesh, hi Jim. Tesla officially joins the S&P 500 on December 21st. Hold through the inclusion or treat it like an earnings day. You know what? I have to say, and I could be so wrong about this one, Dinesh, but I think you need to hold it up to the earnings and then sell it, and not hold it through. Not hold it through. It just, I don't know what's going to happen. I can't be too. I'm just a little bit careful because, it's just, Tesla is very, very volatile, and I just don't think you want to hold it through earnings. Now, do you want to buy it on the other side of earnings? I think that might not be a bad plan. I'm looking probably to do something like that myself, and and do it that way. Let's look at the daily chart, because this one has been beat up so much. It's currently at 603. Here's the issue, and I'm going to pull out the 15-minute chart. We had essentially a sell-off, a little bit of a sell-off here, and of course that's right about that 585 range, and really the level that it's really stuck on is the $600 level, and we had a huge right at the close. Well, we're almost at the close, aren't we? We had this huge buying volume, so it looks as if, my guess is, tomorrow morning we might want to buy this one. We might want to buy Tesla tomorrow morning. Why? Because it looks as if there was a big sell-off, and then boom, it starts to move higher. And so I think that I'm going to try to be buying some shares coming tomorrow morning. I'm going to probably be trying to get. I got stopped out. I had my stop set a little bit above where I had bought them, so I did make a little bit of money, not a lot, but I'm going to be back in because I do think that Tesla is going to be, it's a monster, and I think it's going to be even better. So without further ado, I need to go to TikTok. Thanks for holding on. And I got a really good question from user 12345665432. Anyways, a user. How does your watch list work? Well, here's what a watch list is. What I'm doing with the watch list is I'm getting the very best stocks that I can find that are about ready to make a move. And then what I'm doing is I'm getting them into the ready position. And when the stock reaches a certain level to the upside, typically, that's where I'm buying it. For instance, today today on the watch list, and I'm showing you the watch list that is available by going to www.Dallas Trading Floor. For instance, I bought Floor into Core today. Why did I buy it? Well, because at the time it went into a buy range, and the buy range is the pivot point, which is this number, 86.34, up to 5% above that. So it was right in that buy zone. Now, why would I buy that why would I buy that like that? Well, the reason I would buy that like that is because of the way that that stocks trade. PRT. The symbol on this is PRTS, parts. So I'm gonna go over here and show you the chart. Oops, PRTS. And I'm going to show you both the weekly chart and then the daily chart. This is the month, this is the weekly chart here. And as you can see, car parts, not only is it being acquired heavily by some of the funds, but it has this very nice upward motion, really going from about March 23rd, by the way. This is March 23rd right here, when the S&P 500 made its low, and then it's moving right up. Now, it's got this cup formation here. It went up and then pulled back, and then it's coming up again. Well, this is when it's very, very likely to move higher. Now, here's the thing. As a stock moves, it typically will move up to the pivot point, and then if it doesn't have enough power, it will pull back. And what I mean by power, those are strong hands buying, typically the funds that are buying it. So it pulls back into a cup. And today it pulled back just a little bit, but it's still above this very important line here. This is the 40-day line. So I do believe that this one is potentially going to move higher. Now, currently, I have my stop set very close to this at $14. So I might get stopped out of this one. Even if I do, it's down $2.04 today. I may be back into this one because I do think it's very likely that this one will go higher. Now, this does have some black marks against it. Typically, you don't want to buy a stock below $15 a share, but we're right at that level. So that is kind of how the watch list works. What I do is I go through and I try to find the very best options. For instance, this is car parts here. And then what I do is I put it on the list. Now, currently, I'm just right below the buy zone. Now, I bought this one, but I bought it as it had just moved just slightly above this pivot point of $14.90. Currently, the price on this is $14.05, so it's pulling back there a little bit. And I do have a stop loss on this one, so I might get stopped out of this one today. And I guess the stop loss on it has is $13.07, so it's just slightly below that. If it can move through this pivot point of $14.90, then it's probably going to go higher. It's going to get supports there. So that's how the list works. To get on the list, to see the list, super easy. All you have to do is go to DallasTradingFloor.com and then go ahead and subscribe to the Action Trade Alerts. And if you do that, you'll be on all the lists. So I'm going to give you an idea of kind of what the website looks like, www.DallasTradingFloor. And it's www.DallasTradingFloor.com. I'm going to be creating a new website here pretty quick with an SSL certificate. Currently, I don't have one because I was cheap, and I will get that going for you. Well, anyways, www.DallasTradingFloor is where you want to go. So I appreciate that question very, very much. Let's take another question from TikTok to kind of get an idea. All right. So explain how your checklist of 9 or whatever you call it, is that public? Well, absolutely. You can find out what this checklist is. And this is a great one. I call this the smell test. and basically, this is the checklist that William O'Neill uses. I probably should put this out on the website with kind of checklists and things to do. I haven't done that yet, but it is totally public as well. And now I'll put it up on my website. So I'm going to put a note to myself, and that is put checklist on website. Now, if in the meantime you want to find out what I'm talking about here, and why I'm talking in such riddles, you can find out by going to Dallas Trading Floor. And here's the thing. On Dallas Trading Floor, I have this thing called Learn to Trade Bookshelf. I don't know if you could see that. Yeah, there you go. My connection would work. But anyways, this first one here it shows you a copy of How to Make Money in Stocks, a Winning System, Good Times or Bad. And that's where the checklist comes from. And by the way, if you want to learn how to trade, this is one of the very, very best places that you can go. Well, hopefully, I didn't refresh. That's too bad. I'm definitely improving my website here, so hopefully it'll be better. But if you want to subscribe to the free Action Trade Alerts, it's right here on the homepage. subscribe, free trade alerts, first and last name, and your email address, and just hit that subscribe button, and you'll be good to go on that. So that's sort of how the checklist works, and it's very, very powerful. William O'Neill developed this over about 30 years, and he is probably one of the greatest traders ever. He's now retired, but he invented the CanSlim method. So this is something that is really, I think, really exciting. Once you start to learn this, it's gonna help you narrow down the field of potential stocks that you could invest in, and it makes it so that it's going to be a little bit less hard to make a mistake. This kind of is a mistake. This is kind of doing your checklist, kind of like when you're flying a plane. You want to do that checklist because you might not remember to review everything. This kind of does it all for you. So I really think it's great. Now, I have a question again from TikTok on AAL, or American Airlines. Now, I want to be clear about this. American Airlines and all the airline stocks in general are very bad right now. I wouldn't be an investor in them. And here's why. This is the weekly chart here. And as you can see, we still have on the airline stocks a downward trend. Now, it's true, it has moved above the 200-day moving average, and it's moving up very, very rapidly. But I'm not even interested in buying this stock until it comes basically above this red line that I'm drawing. And why am I drawing that line? Well, that is the trend line. As you can see, the trend basically was down before the COVID problem hit. On March 23rd, it just dove like you read about, okay? It's recovering a bit, okay? But it dove below this black line. This is called the 200-day moving average. If a stock moves below this 200-day moving average, you absolutely don't want to buy it. Why? Because the trend of that stock long-term is downward. Remember, we want to buy a stock high going higher. So we don't want to buy below that. So by drawing that line, we know what the trend is. Now, where would I start being interested in American Airlines? Well, this line tells me that I should be interested right below $20 a share, or about $19 a share. It still isn't there yet. It's moving up. Maybe it'll move higher. But that's my first test. So right now, I wouldn't buy the stock at all because it just doesn't have the right trend. Secondly, I'm going to look at the checklist. The smell test on this is very bad. And the reason is it's only 4 out of 9 criteria on that. So that's not good enough. We also have a decreasing fund ownership. Now, what that means is that many people before this COVID thing were heavily invested in the airlines. Warren Buffett was. But guess what? They're selling it. And because we don't want to be in something an area of the market where people are selling, because it's just going to be much harder to make money there. So that's the thing with American Airlines. I mean, it's just not going to be easy to buy American Airlines at this level. And I don't think it's going to give you it's not going to do very, very well for you. So I would avoid American Airlines. I'd also avoid Delta and even Love, which is probably the best of the bunch. That's Southwest Airlines. I'd just avoid them all because I just don't think that the sales are going to recover. Dinesh, super, took a ride on BE from 13 to 30, then sold off. Would it be a good time to buy again? Wow, you're doing, Dinesh, that is how to do it. Basically, what we're trying to do here as momentum traders is we're kind of trying to look at the market to see kind of where the momentum is, get on that elevator, let that elevator go up to the top floor, and then jump off, and then wait for it to come back down and do it again. So that is terrific. Yeah, definitely a hard down today. It's 24.93. I think you wrote it up. Well, you did really well on this, by the way. Look at that. About $30. You should congratulate yourself. That's a great move, Dinesh. I really think that is really good. Now, this is one of the reasons why I recommend for many people, and this is showing the chart on. I recommend for people, when you have a bottle rocket like this, and this definitely is. This is just moving very, very nicely up. It's very, very nicely up. What you do is that as you get on the elevator here, just keep those stop losses going up like this. Just keep setting them up, and then eventually it gets to the top, and wow, it tops out, pulls back, and you're sold out at a huge profit. Notice how the relative strength on this is 99. I like to buy stocks at least 80. This is 99. It doesn't get much better than this, even though they have relatively poor earnings. The funds love this stock for some reason. I don't know why, but they do. And that's who's buying the stock, and that's why it's going up. Let's look at the funds and ownership. And you'll notice on this, last year, at the same time, 2 years ago, they had 110 funds in here. Last year, they had 187, so it went up a little bit. But this year, it went up to 304. Well, actually, it's going to be higher than that. So the funds like this for some reason. That's what pushes stocks up. You want to see where the funds are going. If you see where the funds are going, then sometimes you can get some very, very nice movement and make some very nice money. So congratulate yourself. That's pretty excellent. All right, so let's take a look, thank you, at DCBO. Let's look at DCBO. DCBO. And let's look at that one. Okay, wowee kazowie. This is a Canadian-based company that cloud-based learning platform. I do like the educational space, but I don't know if this is the one for you. There just isn't enough. There's just not enough here to buy it. You'll notice the relative strength is 1. Here's the problem. Unlike the one that we just saw, BE, which had a relative strength of 99, this has a relative strength of 1. So I'm not very excited about this one. It doesn't have any earnings. It only has 7% fund ownership. It does have increasing sales, which is nice. But this relative strength of 1 just isn't, just isn't where you want to be. It's just too little. It's just not good enough. The checklist on this is only 5 out of 9. So I would avoid this one. I really would. I would avoid this stock. But I thank you very much for the question. I just think that there's better things that you can do. Another question from Dinesh. I'm in Tesla at 410, thus wondering if I should hold past the official S&P. You know what? I think you've got enough cushion where you might just be able to stay in this one. I'm more swing trading Tesla myself. I'm trying to get just the upward momentum, and then on the pullbacks wait and then buy in the ups. So no, I definitely think you can be in a position trade on this. Now let me tell you the difference between what I'm talking about. On a swing trade, what you're looking to do is to make about 3 to about 6 to maybe 10% on a very fast swing, typically within 3 weeks. On a position trade, if you've got a real winner and you want to hold on to it, then it becomes a position trade and you want to hold it for a longer period of time. And there's different rules on that. But I definitely think that you're definitely in there at a great price, and you made a super buy at 410, and I think that you want to hold it because it could just move very, very nicely bigger. Question from Ali. Tesla big pullback, maybe because of their share. Yeah, probably. When you have a share offering this big, it is dilutive. There's no question about it. And but I still think I just still think that Tesla. I mean, I don't think this is the end of Tesla by any means. I think it's going to go higher, but you just got to wait. Yeah, Christian, thank you so much for this question. Tesla's big pullbacks because JP analyst said, yeah, well, I know who this analyst is. Not that I keep lists or anything, not that I keep grudges, but this is a value investor. This is the guy that says, hey, it's not worth that. Well, yeah, I mean, if you're going to sell it off in parts, it's not worth that. But the sum of the parts on Tesla, believe me, is worth a lot more than the parts. Electric vehicles are the coming thing. I mean, whether you like that or not, and it's not just for Tesla. That's going to be for GM. That's going to be for Toyota. Basically, I think a lot of the world's manufacturers are going to move to this technology, and currently, Tesla has the best technology, at least as far as I know. So I don't think this is the end of Tesla by any stretch of the imagination. But I think that another thing, you've got to be careful with some of these analysts. Now, I'm not saying that you should disregard analysts, but a lot of these analysts want to push the price down so that they can their funds that they represent can buy in at a level that is right. So just be very careful. Be very careful of people with Trojan horses and ulterior motives with Tesla. There's a lot of people that would love to force the price of Tesla stock down so that they could buy it on the cheap. So be careful listening to them, because I do think it's going hard, going higher. Real Madrid. What do you think about Fastly? Well, you know what? I got into Fastly. I took the haircut like everyone else did, unfortunately, but I don't think it's over for Fastly. Not at all. Let's take a look. It's still got a 98 relative strength, so that is, man, that's good. So we have the 98 relative strength. We're starting to see some buying come back into Fastly. Remember, they took this swan dive. I don't know if you can see it on here. I'm going to go to the daily chart and show you this, but there was a swan dive here. What happened is that they lost TikTok as a customer right here, and then they took this swan dive down. It was kind of bad. And then, boom, it just keeps on going down, the gift that doesn't keep on giving. And then eventually people said, man, it's almost at the 200-day line. This is the black line, but it's still a good company. So it turns around and it starts to head north. Now, a significant thing happened today. A significant thing happened, and why this might be we might be ready for a potential buy on this once again. This red line here is the 40-day moving average. This is a very significant line on the daily chart, because typically the algorithms will play off of this line. So it pushed above that, showing that there was enough strength, and then it's pulled back. So if this thing reverses off this 21-day line, off the 40-day line, then it might be a buy once again. So let's kind of see if there's a place that we can buy that. I'm going to go to the more detailed chart. I'm going to go to the 15-minute chart. This is probably not the chart you should be using to buy off of, but it kind of might give you an idea of levels that we might be considering it. So it looks as if, and I'm going to go back to the daily chart here to see, but it looks as if the 40-day line is at 85.43. So let's go to the 15-minute chart to see. So we're about here. So yeah, that makes sense. Okay, so this basically is the 40-day line. Here's what's happened. Here's what's happening with Fastly. As you can see, it came right up to the 40-day line. It tried to push past it. It didn't work. It pulled back, and then it made another attempt on it. It pushed above. It pushed above the 40-day line, but it ran out of gas, and then it pulled back again to the 40-day line here. And then now, but once it hit that 40-day line, you'll notice it powered up again. And so now it's pulling back to that 40-day line. So really what's happening here is that there's a lot of people that want to buy this thing. And by the way, this is the 15-minute chart. So we have a tremendous amount of volatility here. We almost 10 points, basically within a few minutes. So what I think is that if this thing pulls back to about the 87 or 89 level, and the reverses, I think you could definitely get maybe as much as 10, maybe as much as 10 points in a very few minutes on this. But that's very speculative. So I wouldn't buy it at this level. Obviously, it's too high. I want to see it pull back closer to this 40-day line, but I definitely like it. It's got a lot of things going for it, so definitely something that you definitely want to think about. Okay, so bought my covers balls back at 80% profit. Right on. Have an outlook on parts. Thanks, Jim. Thank you, Mega Homes. Appreciate it. You can make a ton of money by. Here's one of the best ways to short the market in an ascending market. Right now, we don't want to short any individual stocks because the market direction currently is upward. But we can short an individual stock safely, and that is by selling a call on a stock, and then if the stock goes down, if we get a hit like we did today, buying it back. And where you should consider buying an option back. Let's say you sold the option. I'm just making this number up, but let's say you sell the option for $10. That would be great. That would be a great sale, by the way. A $10 option is very, 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 very sweet. Okay, so you sell it at $10. You put basically 10 times 100 or $1,000 in your pocket, restricted cash, and then the stock gets whacked or whatever, and it goes down, and now the option is only worth $2. You can buy that option back at $2, and you have a profit of $8 or $800. So that's a great way to do it, especially in a volatile stock, is to potentially to do it like that. So congratulations on that. I just kind of wanted to explain for a lot of people kind of what we're talking about in terms of options. So that can be a very, very good way to do it. All right, here's somebody this is interesting. Can you talk about Tesla? Okay, I'll talk about it in just a second, but I have another interesting. It's Guest Studio, and this is very interesting. Should I buy a new residential investment right now? Well, it depends on where you are, of course, because all real estate is local, and I'm not trying to say that I'm any expert on real estate, but when I did move to Dallas, I was able to buy several houses, no money down. Yes, you can do it, but only in certain market conditions. Right now, with the interest rates very low, it's not necessarily the best time to buy a residential investment. I do think that when we reopen as a country, there will be, unfortunately, and I don't rub my hands or anything like this, but there's going to be a lot of residential defaults. I don't know if you know this or not, but you want to check the foreclosure index, and it's been going up. I do think that there's going to be a problem in that area. And then once there is a problem in that area, that's when you start wanting to look at houses. Right now, it's a very tough time to be buying a residential property because there's not very much inventory in most parts of the country. Now, that's not necessarily true in New York City or in San Francisco proper, but in many places that people are moving to, I know here in Dallas this is true, there's not a lot of inventory, so people are getting bid up. And so I don't think it's necessarily a good time to enter the real estate, the rental market right now. But that may change, and things always do. So that's a very, very good question, by the way. Okay, let's talk about Tesla a little bit more. Tesla, I still think is going to go up. Now, it's true, they had this analyst come out and say, Tesla stock is worth $90. Well, you know what? If somebody's willing to sell me some Tesla stock for $90, I am going to mortgage my house. I'm going to do everything I possibly can to come up with the most money, and I'm going to buy all those shares. So I don't think that's for real. I think that, they're trying to scare off a lot of the smaller investors because the institutional investors, the strong hands, want to come in and buy the stock because it's going to be part of the S&P 500. So they're going to have to come in. So they've got to get rid of the little guy. They have to get rid of the little guy. And what better way to get rid of the little guy than put out some bad news on Tesla? Now, am I discounting all news on Tesla? Not on your life. But here's one thing I do know about Tesla, and I'm not an expert on the company by any stretch. But here's one thing I do know: the company has sold its entire production for the year. As far as I know, there's no other major car company in the world that has done that. Okay? So think of that. Everything that they're producing, they're selling. I wish GM could sell everything that it's producing. It's gotten a little bit better because it didn't produce for a few months, and it was able to thin out its inventory a little bit. And Ford has the Bronco, which is waitlisted right now. And but Tesla is the king of this. They basically have sold their entire production essentially for a year. So very, very good thing. Okay, let's take a look at, and this is a question from TikTok, and thank you very much for this. One of my favorite stocks, actually, it's called Blink Charging. And what they're sort of in the EV space, but in an interesting way. They are basically what they are is that they co-op, they contract with like bodegas and various other places, various retailers that have places where people gather, like convenience stores, and they do a revenue split model where they'll put some of their chargers out front, and you can just go up with your iPhone. Let's say you don't have a Tesla, but you do have an EV. You have like maybe let's say a Chevy Bolt or possibly maybe a Nissan Leaf. Nissan Leafs are very affordable, by the way. They're not particularly sporty, but they're very affordable. And you go over to the Blink Charging, you plug it in, and you just control it with your iPhone. It's an app, and then you pay for it with a credit card right on the machine, and it charges it right up. So I think it's a great model. Now, that said, let's kind of look at where they're off a bit today, but let's kind of talk a little bit about them in terms of where they're going. Now, when I started this summer, when I started recommending this appeared on the watch list, we were basically under $10 on this stock. You know, it was a kind of a lower price stock. Now, typically, I like to seek stocks. You know, this was this summer I was doing the under $10 highly rated stocks. And I may do that. I may start doing that again. But this was one of the one. There were two stocks that kind of graduated really nicely. One of them was Blink Charging, and the other one was called Retractable Technologies, or RVP. Now, Blink, I really like Blink because it really graduated from being about a $9 stock on up to currently it's selling at 27. So if you'd held on to this one, you did very, 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 very well, because at the beginning of the year, you know, this was a less expensive stock. Basically, in the summer, right about here, in June and July. Now, I've bought and sold this one several times. I still really like this one. It's got a 99. It's got a 99 relative strength. If it'll get, sometimes my pen doesn't work on this one, but it has a 99 relative strength. I really like that. Let's look at the funds. Let's see how they're moving in it or out of it. We've got a nice smell test on it, 6 out of 9, and the funds basically are, you know, increasing. I mean, they're not. This is a relatively small cap stock, so it doesn't have nearly as much fund sponsorship as some of these big issues, like, you know, like these big issues. But here we go. You know, 20, 29. So we're moving up nicely on that. The question is, where can we buy this? Well, let's look at the weekly chart to see if there's any place we can buy it. It's really tough to buy this one right now, but I do think that, you know, we want to see if it pulls back to basically this level here, about $14. Now, that's going to be tough because currently it's trading at 27. So there may be an alternative buy point, basically on the 21 the 21-day exponential, and that would be right about here at 24. So let's see if it pulls back again to this line. It's pulled up from that. It's 27 right now. I wouldn't buy it. I would wait until it maybe pulled back just a tad, and I think you might have a really good buy there. But look at their sales; they're just moving up very nicely. We have 15% funds in here. We haven't really gotten to the turbocharge area. What I call the turbocharge area is when there's more than about 20% funds in it. From 20% fund ownership onto about 65, that's when you kind of get it really, you know, it starts really affecting the stock. This stock could easily, it's already doubled since the summer. Actually, it's tripled since the summer. It probably could double one more time. So this is one definitely worthwhile looking at. It's not currently on the watch list. It's on the watch list, but I currently am not in the stock. But you know, at the right number, I'm probably back into Blink Charging. Thank you. All right, so let's see. Oh, Palantir, another one, Harris. Thank you for this, Harris. You know, Palantir, I sent out several alerts on this. I'm still in Palantir. I got pulled out of Palantir. I got washed out of Palantir again. I think I'm still in it. I got washed out again. This is a really tough one. I do think it's gonna, you know, I want to possibly get back in this one. This is a bunking bronco, and it's hard to ride those bunking broncos. But, you know, I just love the fact that it's moved up to this level. I think if we move past about this $30 mark, now currently it's at $26.62. If we move past about that $30 mark, I think it's game on again with this. Now look at this one. We've got a 99 rating, which is excellent, by the way. And let's look at the fund ownership. This is really interesting. This is an IPO, and it's just recently IPO'd. So what's so interesting about this one is we've got already 69 funds basically within the first quarter. So right out of the gate, this is really good. And by the way, they just announced another deal to distribute do the kind of the back office for the distribution of the coronavirus vaccines. So another good win for them on the sales front. They basically also got a deal with the entire country of Greece. It's kind of amazing. 6 out of 9 on the smell test, so that's looking pretty good considering it's such a new issue. You know, very good on the fund ownership. But the most important thing here is that we have this very, very nice increasing, and this is the important thing, increasing sales. I mean, their sales are up 52% quarter after quarter, last quarter, and then 43% before that. So basically what we're looking for here is that kind of thing. We still have a negative cash flow on it, and we still have relatively small fund ownership at 7%. I think this is going to go up. That's my guess, is that this is going to go up. Now, it does have, as you can see, it has some very good company. One of them is Digital Turbine Apps at 99 relative strength. Cloudflare, which is I'm in on the small portfolio and otherwares, that's also 99. And Zoom. Now, Zoom, I think you have to be a little bit careful on. I do think it's pulling back. Fastly, 98 again, and AutoEye at 98. So these are all potentially also good ones to look at as well. But I really like Fastly. I'm kind of waiting for another entry point. I haven't really. The problem is I don't really have a very good entry point here. I'm kind of hoping it's going to pull back to about this 21-day exponential at about 2250. I would definitely be in it there. It's pulled back, so the question is, will it move that low? Probably not, to be honest with you. I think that it's basically going to pull back possibly as low as 24, and I think it's going to reverse. And I think once it clears about this $30 mark here, I think that it's probably going to go higher based on the trend. And let's kind of just do a quick kind of a rough estimate of the channel here. So it's got a very, very steep channel, which is a problem, because very steep channels tend to get a lot of pullback. The reason this pulled back is because it's pulling back into the channel. I believe that this issue can pull back probably to. This is why I'm so interested in this 2250 level, because I think once it pulls back to that level in this channel, it's probably likely to reverse and go higher. But again, it's a very speculative stock. I wouldn't have more than about one full position in it, probably a half position in it. But I think it has tremendous potential, and I still think it does. All right, question on Pfizer, or PFE. What's happening to Pfizer? This is part of the problem when you're looking at a story stock, and Pfizer is definitely in that category. What I mean by story stock is a stock that totally moves on news. Remember, in the stock market is what they call a forward-looking indicator, and so therefore, people typically buy in rumor and sell in news. Well, the rumor was Pfizer was going to be making a vaccine. Indeed, they did, but unfortunately, Moderna made a vaccine too, and AstraZeneca made a vaccine too, all at the same time, cutting into their potential sales. So this is the reason I think it's always tough. But this is why you should kind of look before you leap on this. Now, in terms of the big drug stocks, and this is one of the big ones, we have some we have some good things going on with this. It's not really much of a mover. But here's the problem, and here's why I wouldn't buy Pfizer. It only has a relative strength of 61. I'm looking for at least 80. Moderna is going to be the better buy in this one, primarily because with Moderna, it's going to have a higher relative strength, and that's a key. Also, another problem that Pfizer has been having is declining sales. Now, their profitability is excellent, but the market doesn't like declining sales. As a matter of fact, the market likes increasing sales much better than it likes increasing profits. I know that sounds weird, because look at this cash flow. I mean, it's excellent, $4.11 a share. That's super. When on a $40 stock, that's basically a 10% return on equity. So that's tremendous. See, why is this being punished? Well, it's being punished because the market is looking into the future 6 to 18 months, and they're saying, well, yeah, they're very profitable and everything like that, but there's a lot of competition coming on. So this is why this relative strength is so important in terms of looking at the value of the stock. Let's look at the checklist. This is my smell test, and it's got 5 out of 9, which is just below what I typically do. I like to see 6 out of 9 or better. It tends to work for me better. We do have a lot of funds in this one, and it's just slightly decreasing, but we've got a lot of funds with it. This one is one of the very big cap pharmas. So here's the thing about Pfizer. It just isn't. It just isn't the kind of stock, and I'm going to show you the chart. It just isn't the kind of stock that is going to make a lot of difference. It's got it has the 61 rating on the relative strength. That's not good. It doesn't have a good checklist. It's only 5 out of 9. The ownership on the funds is a little bit decreasing. It's still it's a great company, especially this would be a great company to work for, but it's not necessarily a stock that you want to own. And that's just kind of sad, but true. That's sometimes the best stocks to own. You wouldn't want to go near them. You wouldn't want to ever work for them. But sometimes it's that way. Pfizer, you probably want to work for them, but you probably wouldn't want to own them. Can you tell us what the problem is in the stock market? Well, the problem is there's a lot of problems. There's always problems. As a matter of fact, the fact that we don't know who the president is going to be. I mean, probably it's going to be Biden, but who knows? So that's a problem. The stimulus doesn't look like it's stuck, so that's a problem. So yeah, there's a lot of problems. So there's a lot of things that can make the stock market go down. Right now it's up tremendously, but who knows what's going to happen on that? Who knows what's going to happen on that? What do you think of what do you think about CRISPR? CRISPR is actually one of my faves. It's a Swiss company, CSRP. I think it's it. CSRP. Is that right? No. CRSP. CRSP. This is CRISPR Therapeutics. And what this company does is fascinating. I don't know. There's a gentleman named Craig Vitter. He's a life scientist that basically was the first man to successfully sequence the genome. And he was the one that basically kind of had a precursor to this technology. But this is a company that does gene editing, and it's just a tremendous company all the way around. It has extremely good relative strength of 96 here. I just wanted to show you that. We do have some decreasing sales, so this is a little bit of a concern. But this company is so revolutionary that even with that, I think that it's worth looking at. Now, the checklist is 6 out of 9. That's my minimum. And the fund ownership is increasing. But they're in such an exciting area, this gene editing area, that I think that this one is very, very worth your while. There was a buy point on a first stage cup at 105.12, and that was basically in mid-September time frame. So it's been moving up ever since. Let's look at the daily chart to see if there's any entry point on this. There just really isn't. Unfortunately, the last time that this really had a good entry point was at 105.12, and then it broke out higher, and then it pulled back. And basically, this is a very bullish cup with handle type of pattern. It didn't quite make the handle, but this is the handle that you're looking for. And then right after it consolidated, it just bounced and it went stratospheric. So it's pushed up again today. There's not really a good place to buy this one, unfortunately. Currently today it's at 146.63. It's up a little less than 1%. And looking very strong. So you want to watch this one. There's just, unfortunately, not a really great place to buy this one. I love this stock, and I think that this is potentially going, this potentially could be $200 or $300 a share very, very soon. So you never know. Okay, so question about J.P. Morgan downgrades CrowdStrike from neutral, announces a 175 strike. You know what? I know that J.P. Morgan is a big deal, but I think a lot of what they've been doing is they've been knocking some stocks to try to pull them down so that some of their mutual funds can buy them. I'm skeptical. CRWD is the symbol for CrowdStrike. It's pulled back to 166 today. Now, where do I think this is going? Let's look at the weekly chart first on CrowdStrike. I got shaken out of it a little bit, but the buy point on CrowdStrike on the cup basis, second stage, 153.90. It's currently at 166. So it's pulled up and then it's pulled back right into this buy zone. The buy zone basically is from 153.90 up about 5% above that. So we're very close to it being in the proper buy zone. I do think that this one is still viable, even with all the hullabaloo. It's just a little bit extended, not much. and I do think it could easily go much higher. So let's look at the channel lines to see, kind of get an idea of how we're tracking. And I think what's happened is we're pulling back on this, basically to about the 145 level. If you could get this, I don't think it's going to go as low as 145. I think maybe if you get this about 155, I think it's going to reverse its trend higher, and it potentially could go easily to 200, 230 by the near the first of the year. So CrowdStrike, I definitely think you want to watch this. Mr. Sid, I don't think you want to be out of it. If you're in it, make sure that you don't take any more than a 7% loss. But, I'm not saying totally disregard the J.P. Morgan stuff, but I sometimes, the Goomba that was talking about Tesla, being worth 90, I think that kind of speaks for itself, unfortunately. So it definitely kind of speaks for itself on that, and it's not, it's definitely not the kind of thing to do. Okay, let's look at, from Tesla, HCAC, and see what we have there. And that is Hennessy Acquisition Corp. Now, interestingly enough, this is a blank check corp. You know what? I would love to talk more about this, but I just don't know what they're buying. Now, maybe they're going to buy some of the marijuana stocks. I just don't know. It's moved up a lot, but I just don't know what it is buying. That's the thing, folks, about blank check stocks. I just don't have enough information, so I don't like to speak about them because I just don't know. I just don't know what to think on those. All right, I have basically one more question. Okay, here we go. Now this is interesting. Oh, now, here I am knocking J.P. Morgan on their analyst, and and I have another one here that's basically said that the target for Tesla. Okay, yeah, okay. This is okay. Here's the thing. Here's why you kind of thank you, Narrowan. This is very good. Thank you for bringing this up. This is a very good, very good observation here, and I appreciate it. This is the difference between Tesla in the eyes of J.P. Morgan, which is a bank, and it doesn't trade really. It's a bank, and it's a good one. It's one of the best of the money center banks, and Goldman Sachs, which basically makes all of its money trading. Goldman Sachs is saying 780 on Tesla. I believe that. I do. I think it can easily go to 780. And J.P. Morgan, well, it's at 90. Well, J.P. Morgan is this is the difference between technical analysis and fundamental analysis. J.P. Morgan is doing fundamental analysis, and Goldman is doing technical analysis. I have to believe technical more. So thank you for bringing that up. Well, it is almost an hour here, 58 minutes. Just wanted to thank everybody for coming on. I'm going to try to get back to everybody. Please be patient. I'm sort of a little bit short-staffed here, but if you want to learn more about the way I trade, as a matter of fact, many other very successful traders trade, it's you might want to look at the at getting the book "How to Make Money in Stocks: A Winning System, Good Times or Bad" by William O'Neill. It's available on the Dallas Trading Floor website. Unfortunately, it's not coming through and showing exactly the cover, but it's an orange cover, and I think it's the 4th edition. So that's something you might want to look at very, very seriously about getting, and it's definitely worth the read because this book basically changed my life. It made me into somewhat of a good trader and essentially a consistent trader. Am I not? Is my mic not good here? Oh goodness, I'm almost. I should be. Okay, I should be good there. Okay, so thank you very, very much. Thanks for everyone watching today. I'll be back tomorrow at the same time, 2:30. Until then, basically, if you want more information to get on the free trade alerts, super easy to do. All you have to do is go to www.DallasTradingFloor and sign up for the free trade alerts. I hope to see you tomorrow, and thanks again. Happy trading. Buddy,